Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, this is the fourth video of liquidation chapter. Now in the previous three videos we have seen the concept of liquidation, the format of Liquidator Statement of Account, and in the previous video, that's the third video, we have solved a problem, and in that problem we have focused on the liquidator's remuneration, especially how to calculate when sufficient funds are not available, how to calculate the liquidator's remuneration on unsecured creditors if sufficient fund is not available, right? How to do that and all we have discussed in the previous video, right? The previous problem was a small problem which would come for 4 marks, 5 marks, 6 marks depending upon the universities. Now in this video, what are we going to do is, in this video we are going to solve this big problem, right? This big problem, and this might come for 20 marks, 14 marks, 16 marks, 15 marks depending upon the universities. Fine. So now let's start off the video. Let's go through the question first. Now here is the question. See here, a company limited went into voluntary liquidation on 31st March 2020, 31st/3/2020. That's the date of liquidation, date of winding up, right? So then they have given us the horizontal balance sheet containing the information of the company. See here, we have got preference share capital of 4 lakh, 4,000 preference shares, and then two types of equity shares are there. I mean two classes of equity shares. One is 75 paid up and the other is 60 paid up. Both the face value are same, 100 and 100, but the paid up value is different. Okay, equity shares are given and the debentures are given. See here, 5% debentures 2 lakh, and there is interest outstanding on debentures also, right? 10,000 interest is outstanding, that is accrued interest. Now you know, right, what do we do with the debentures? We pay the debenture holders their face value back and the interest accrued, interest outstanding, as well as interest till the date of payment if the company is solvent. And in most of the cases, in most of the problems, always company will be solvent. They will say voluntary liquidation, that means company is solvent. If the company is insolvent, right, that's compulsory liquidation. You cannot do voluntary liquidation under the IBC code, okay, under that Insolvency and Bankruptcy Code 2016. You cannot do voluntary liquidation if the company is insolvent. So most of the problems, almost all the problems will be voluntary liquidation and the company will be solvent. So you have to pay the face value of debentures back to debenture holders, the interest outstanding on debentures, it is also called as accrued interest, and interest till the date of payment. Okay, fine, right? Then creditors is given 2,90,000, and then come to the asset side. All the assets are given: land and building, plant and machinery, patents, stock, debtors, cash at bank, profit and loss. Then here below you have additional information. See here, the preference dividends were in arrears for 2 years. So with this sentence we can understand that dividends are in arrears. We have to pay dividends of 2 years, right? Then creditors include a loan for 100,000, 1 lakh of the mortgage of land and building. So now with this sentence we can understand this is secured creditor. We have got a loan of 1 lakh by mortgage of land and building. So here this is security, land and building. Okay, so we have to take this in the receipt side, right? To surplus realized from securities, yes. Then asset realized. See here, asset realized is given land and building. At this much amount land and building has been realized, so we have to take this in that surplus. Fine. And then plant and machinery, patents, stock, debtors. Fine. And then they have said liquidation expenses is 21,800. The liquidator is entitled to a commission of 3% on asset realized except cash. And except cash. So here what is happening here? Liquidation expenses is given and the liquidator is getting a remuneration on what? On asset realized. Okay, and you don't have to include the cash, right? These are the asset, but they are sold at these values, these values, and you don't have to include cash in that. Don't include cash in there, right? That is what is meant by except cash. And 2% on amount paid to unsecured creditors and preferential creditors. So whatever you will pay to unsecured and preferential creditors, on that also you have to pay 2% remuneration to liquidator. And then they have said preferential creditors amount to rupees 30,000, and then they have said assume payments were made on 30th September 2020. Now you will think, why is this given? Why this payment date is given? See, the reason being this date given is you can calculate the interest till the date of payment. Always remember, if interest, this date is given, right? If this payment date is given and there are debentures, then you have to take interest till the date of payment. Okay, interest till the date of payment. You pay three things, right? Face value, accrued interest, that means outstanding interest, and interest till the date of payment. 3 things you pay to debenture holder if possible, if it is possible in the question. Now in this question it is possible because here the payment date has been given and also there is outstanding interest in the balance sheet also, right, and the face value. So that is what you will pay to debenture holders. And then they have said prepare liquidator final statement of account, yeah, LFSA, right. So now let's solve this problem, yeah. And one more thing, here you can see that creditors whole amount is given 2,90,000. Now in this creditors there is secured, unsecured, and preferential also. All 3 are given. Okay, all 3 are given as a whole. Fine, don't worry, we will solve this problem. It's very simple, right? So now let's solve this problem. Now let's solve this problem. See here. Now I hope you already know the format, right? The format, the sequence which we have to follow, because this is very important, right? So I hope you all know this. If you don't, then please watch the previous video, right? The format video, especially the video number 2. Fine. So now let's start. See here, first what do you take? First you go to the receipt side and you take assets realized, isn't it? But first you have to make sure that do you have any cash in hand or cash at bank. So do we have anything in this problem? Yes, we have, right? Cash at bank 60,000. So let's take that. And then what do we do? And then we take assets realized. Yes, but you don't have to take these figures because these are the book values. The asset will be taken at realizable values, the values which would be given in the additional information, right? But here as you can see the land and building is given 2,40,000, but you don't have to take that directly. Why? Because there is a mortgage on land and building, so that will go to secured creditors, right? So you have to net off that. Yes, how? Like this. See the format. To surplus from securities, land and building you have to take and then deduct the secured creditor, that is the 1 lakh loan we have, right? Yes, so that is how you have to take land and building, not in the asset realized. So now let's take the asset realized, yeah, plant and machinery, patents, stock, debtors. Let's take that. 2 assets realized. Yeah, we have taken asset realized. So now let's add them up. Yeah, I have not taken land and building. Okay, so let's add them up. 160, 120, 60, 400. See here, 160 plus 120 plus 60 plus 400. Yeah, that is equal to 740. That is 7,40,000. Yeah, so let's take that outside. 7,40,000. That's the total asset realized, but that is land and building also. Yeah, so where is land and building? So that we have to take in the secured creditors. No, let's take that. To surplus from securities. To surplus, of course we know there is a surplus. Why? Because land and building has been realized at 2,40,000 and the secured creditors is 1 lakh. They have said, right, creditors include a loan for 100,000, 1 lakh of the mortgage of land and building. So here this is secured creditors because they have a specific charge on the land and building. Yes, so let's take that. To surplus from securities. Yes, that's the security we sold. Simple. This is how you have to do it, right? Building sold minus the secured loan, that is equal to 1,40,000. Yeah, you have to take only the surplus. Fine. And then is there any other receipt over here? Check if there's any other receipt. No, no receipts, right? No receipt at all. All expenses and payments. So now let's go to the payment side. See here the payments. The first payment that you have to do is the legal charges. Yes, if there are any legal charges, then liquidator remuneration, then liquidation expenses, like that you have to follow. But is there any legal charges in this question? Legal charges? Look, no legal charges, right? No legal charges. We have liquidation expenses, but first we have to pay liquidator remuneration as per the format. So liquidator remuneration is, see here, the liquidator is entitled to a commission of 3% on asset realized. So let's do that first. See here, it's very simple. So let's take that. %3 on asset realized. But now you should know how much asset has been realized. See here, these are the total figure of asset realized. Is it? No, it's not. This is only the partial figure. Why? Because we have also realized, the liquidator has also realized 2,40,000 of building also, right? So you have to include that too. 740 plus 240. See here, 740 plus 240, that is equal to 980. 9,80,000. Isn't it? 9,80,000. That's the total figure of 9 lakh of the asset realized. 9,80,000. Right? So if you calculate 9,80,000 into 3%, that is 0.03, yeah, 3%. that gives us 29,400. That would be the remuneration of liquidator, 29,400. 3% on 9,80,000. Then they have said one more is there. See here, liquidator remuneration except cash. Yeah, they said except cash. Okay, so we don't take cash over there. See, this cash is also an asset, right, to cash at bank, so we don't have to include that because it's specifically mentioned in the question, except cash, right? So that is why I didn't take the cash. And then 2% on amount paid to unsecured creditors and preferential creditors. Now we don't know what is the payment we have done to unsecured and preferential, so let's not do that. Let's leave that empty. And the percentage is 2% on unsecured and 2% on preferential. Let's just write that down. Yeah, 2% on preferential creditors. Yeah, preferential creditors, and 2% on unsecured. Yeah, and leave it blank, leave it empty, right? Leave it empty. Then move on to the next thing. The next thing that you have to do is liquidation expenses. Okay, liquidation expenses of 21,800. So let's take that. How much? 21,800. Right. Then what do we have? Then you have to make the payment of debenture holders, isn't it? The debenture holders, 5% debentures, the face value, outstanding interest, and interest till the date of payment. Okay, three things: face value, outstanding interest, or it is also called as accrued interest, and till the date of payment. The till the date of payment means this here. See here, assume the payments were made on 30th September 2020. Fine. So we have to pay 6-month interest also here. So let's calculate that. See here, it's very simple. See here, debenture. In debenture, you have to take the face value. The face value is 2 lakh. Yes, 5% debenture is 2 lakh. So you have to take the face value in the debenture here, 2 lakh, and then interest outstanding. Yes, that is interest outstanding on debenture, 10,000. So take that 10,000, and then what do you have? And then interest till the date of payment. Now, how will you calculate interest till the date of payment? What is the date here? See here, the liquidation date is 31st March 2020. Yeah, this is the winding up date. So now you have to pay till the date of payment also. So the payment date is 30th September, right? So March, so you don't have to take March month, April month, yeah, because it is 31st March. So April, May, June, July, August, September, 6 months, isn't it? 6 months. 30th September means 6 month interest extra you also have to pay till the date of payment. 6 months, right? Till 31st, till 30th September, right? 39 2020. Yeah, this is the date. So now to calculate it, very simple. It's very simple. See here, 5% debentures, right? This is the interest, 5%. So take the face value, that is 2 lakh. Yeah, 2 lakh is the face value, into 0.05 the percentage. Yeah, you will get 10,000, but this is a yearly interest. We need only 6-month interest. So into 6 divided by 12, right? So this is how you will get it, 5,000. Yeah, so 5,000 will be the interest till the date of payment. Fine. Add it up, add it all up. See here, so that is 2 lakh plus 10 plus 5. It's simple, 2,15,000, isn't it? 2 lakh plus 10,000 plus 5,000, that is equal to 2,15,000 is the total payment that you're going to make to debenture holders. 2,15,000. Fine. Then what do you do? After payment of debenture holders, you pay to the creditors, the preferential and the unsecured. So let's go to the question and see how much preferential creditors do we have. Now in the balance sheet, they have given us creditors as a whole figure as 2,90,000. Yes, and here first we came to know the secured creditors are 1 lakh. So from 2,90,000, if secured creditors is 1 lakh minus 1 lakh, yeah, then 1,90,000, the remaining, in that there is preferential and there is unsecured. You have to now find how much is preferential and how much is unsecured. Are you getting my point? 2,90,000 is the whole creditors figure, 1 lakh is secured, the remaining is preferential and unsecured. So now let's find that out. Okay, how much is preferential and how much is unsecured? So here they have said, at last, as you can see, they have said preferential creditors amount to rupees 30,000. So in this 190, 30,000 is what? 30,000 is preferential, then the remaining 1,60,000 is unsecured. Simple, right? 30,000 is preferential and the remaining 160 is what? Unsecured. So let's take that down. Simple. So now you have to make sure whether you have money for the payment of unsecured or not, okay, because that's very important, right? So we have to make sure. Now see here, just by looking only you can understand. You don't have to calculate anything. 740 you have, 1,40,000 receipt you have, 60,000 receipt you have all these receipts, right? You have so much money, and you have just paid 2 lakh here and 21,000 here. So of course you have 160 to pay to unsecured creditors. Of course you have. So you can directly take the figure there. 160 unsecured and 30,000 preferential, right? So once you do this payment, yeah, that is 190 in total. Now you have to give the remuneration to liquidator. You have to write that down, yeah. So let's write that down. See here, 2% on preferential payment was, preferential creditor was 30,000. So 30,000, 2% on 30,000. So 30,000 into 0.02, that is 2%. So that's equal to 600. So 600 is the commission on preferential creditors, that is, yeah, 600. And then on unsecured, what was the payment to unsecured? 160, right? So 160, 1,60,000 into 0.02, that's the percentage of remuneration, that is equal to 3,200. Yeah, 3,200, that would go to liquidator remuneration on unsecured creditors. Simple, right? Now add up all the remunerations. All the remunerations are over, right? Asset realized, preferential, unsecured, yes. So now add up 29,400 plus 600 plus 3,200, that is equal to 33,200, right? 33,200, take it in the outer column. Fine. Yeah, so you did payment to creditors. Now what do you have to do? Now you have to pay to whom? To preference shareholders, right? You have to pay to preference shareholders, isn't it? There are preference shareholders in this. See here in this company, 4,006% preference shares of rupees 100 each, 4 lakh. And in the additional information, it is specifically given that the preference dividends were in arrears. 2 years dividends are in arrears. And you know the preference shareholders get fixed rate of dividend. That is the percentage, yeah? 6% preference shares. So they get 6% dividend every year, right? So easily we can do that. So let's take that preference shareholders payment. So how do we take that? See here, it's very simple. See the format, the preference shareholders, you give their capital back and arrears of dividend, right? So that's how you take it. So let's take that. What's their capital? Their capital is, as you can see here, 4 lakh. So give their capital back, that's 4 lakh. Yeah. And then their dividend. Now the dividend is of 2 years, right? So let's calculate that. It's very simple to calculate. See here, the 4 lakh is the face value of preference shares. 4 lakh into the percentage, the fixed percentage, that is 6%. Yeah, 6%. So 0.06, that's 6%. It is equal to 24,000. Now this is a yearly dividend, dividend of 1 year, right? But we want 2 year dividend. So into 2, simple, 48,000. Yeah, 2 years dividend is in arrears, right? It's outstanding. So that's why into 2, that is 48,000, that will be paid to preference shareholders. Their dividend is 48,000, right? So 4 lakh plus 48,000, it is 4 lakh 48,000. Simple. I took it out in outer column. Then everything is over, right? Everything is over, isn't it? You took the asset realized, and then the liquidation expenses, remuneration of liquidator, the payment to debenture holder is also finished, face value plus interest outstanding plus interest till the date of payment, and then payment to secured creditor, unsecured, preferential creditors, everything is finished. Yeah, almost everything is finished. Now at last, what do you do? See in the format, at last what do you do? At last, after doing everything, yeah, liquidation expenses, yeah, the remuneration and everything, debenture holders, creditors, preference shareholders, and then at last you pay to equity shareholders, isn't it? But now there is a problem. You can't directly pay whatever you have to equity shareholders. First, let's see how much do we have in this problem. See, let's see here, how much receipt did we get? First we had 60,000 cash. Yes, 60,000 cash, right? See here, 60,000 cash we had, plus 7,40,000 from asset realized. Yeah, then plus what? 1,40,000 surplus. Yeah, after deducting the secured creditors, 1,40,000. So we had 9,40,000 in total. We had 9,40,000 in total, and then we made payments. So let's deduct the payments one by one. First payment was liquidator remuneration, 33,200, minus liquidation expenses, 21,800, right? And then minus the debenture holders payment, that is 2,15,000. Yeah, 2,15,000, simple. and then we pay to the creditors, that is 1,90,000. So deduct 1,90,000. So then we are left with 4,80,000, and then we made payment to preference shareholders, their capital and their dividend back. So 4,48,000. Yeah. So then we are left with now 32,000. We have 32,000, and that is to be paid to whom? That is to be paid to the residual, the real owners of the company, equity shareholders, right? But in the question, as you can see, we have 32,000. We have to pay to equity shareholders. But now in the question, you can see that we have got two categories of equity shareholders, two different classes of equity shareholders. We have 2,000 equity shares of rupees 100. The face value is 100, but the paid up value is 75. And another category, 60,000 equity shares of rupees 100. Face value is 100, but the paid up value is 60. You see this? We cannot pay them equally. We can't just say, okay, 32,000, just divide them by 8,000. We can't do like that. Okay, just pay 4 rupees to everyone. No, we can't do like that. Why? Because they haven't paid the same amounts to us, right? We have to make a fair distribution, a same distribution among the equity shareholders. Okay, it has to be proper. So now we have to understand that. Let's understand that how to refund or call or make call to the equity shareholders. We have to understand that. That's very, very important, right? So now let's understand that. Now let's understand this refund or the calls that we have to make to equity shareholders, right? So here there is an important calculation that we have to make to, exactly know how much to refund or make a call to each of these classes of equity shareholders. Yeah, that's when problem arises. Whenever there are two different classes of equity shares, right? Here as it is there, 75 paid up and 60 paid up. You have two different types of equity shares. Then the problem arises and we have to make use of this calculation. So before going to the calculation, let's get an idea about this. See here, in a company, in a liquidation of company, what happens? At last, if any amount is left, if any cash is left, we pay that to ESH, equity shareholders, isn't it? Yes. But you have to understand that always cash will not be enough to pay the whole equity capital. We cannot pay the whole equity capital. Why? Because these equity shareholders, they gave the company how much? The capital 1,50,000 and 360. Yeah, they gave 1,50,000 plus 360. So in total 5,10,000. But do we have enough money to pay that entire amount back to the equity shareholders? No, we are only left with 32,000. After deducting all the payments from receipt, right? Receipt minus payment, we found out that we are only left with 32,000. So can we make the payment of the entire capital? No, we can't. We can't pay entire equity share capital. So then it's obvious that equity shareholders will lose their money, isn't it? Of course they will lose their money. If they are not getting their whole capital back, then of course they are gonna lose their money. So now we have to make sure as a liquidator, right? We are preparing Liquidator's Statement of Account. So as a liquidator, we have to make sure that equity shareholders will have to incur loss, okay? And that loss should be same for each shareholder. That's the most important thing. It should be same for each shareholder. So how do we do that? Let's see that now. How do we make sure that loss borne by each equity shareholder is same? सबको एक ही लॉस कराना है, okay? We have to make loss for equity shareholders same. So that is what we have to make sure. So let's see this calculation. It's very simple. So first what you have to do is you have to calculate loss per share. How much loss we have to make? कितना loss हमें कराना है एक शेयर पे? That is what we have to calculate. So how do we do that? It's very simple. First take the total paid up capital, whatever that is there in the balance sheet, paid up equity share capital. You don't have to do this calculation also. I have just shown you how this figure came out. Okay, it's very simple. See here, take this 1,50,000 and 3,60,000 and add it up. 1,50,000, 3,60,000 added up, you will get 5,10,000. See here, the total paid up capital 1,50,000 plus 3,60,000, the total paid up capital, that is 5,10,000, right? But we have only amount available for refund after doing receipt minus payments. We have only 32,000 available, 32,000 available for refund. So minus that 32,000. Yeah. So the total loss that has to be borne by equity shareholders is 4,78,000. How much? 4,78,000 is the total loss that has to be borne by equity shareholders. So अगर now you have to find, अगर आपको ढूंढना है the loss per share, how much loss is there behind each share then just divide it by the total number of shares. 4,78,000 divided by number of shares, the total number of shares, equity shares, 2,000 plus 6,000, that is equal to 8,000 divided by 8,000, which will give you 59.75 rupees as the loss per each share, loss per share. Okay, so this is what loss that each equity shareholder has to incur, right? You have to make sure both the equity share, both the classes, they will have to bear the same loss per share, and that is here 59.75. How did we calculate this? Simple. Take the paid up capital minus whatever that amount is available. You will get the total loss divided by number of shares, the total number of shares, you will get loss per share. And then simple calculation is there. Just these two categories are there, right? 2,000 shares and 6,000 shares, two different categories, two different classes. Take their paid up values. Here 2,000 is 75 paid up, 6,000 is 60 paid up, isn't it? Take that 75 paid up, 60 paid up, and then just deduct the loss. This is the loss, 59.75, 59.75. Just deduct that, and your answer, if it comes in plus, that means you have to refund. If the answer comes in minus, that means you have to make the call. Okay, refund comes over here, right? Yeah, refund comes over here and the payment comes over here, right? Because the company is making the payment, so that would be refund to the equity shareholders, right? So money will go out from the company if you are making the payment, right? So the refund will come over here and the call, the receipt, right, it will come over here, right? So now this is what you have to do, right? Paid up capital, the total paid up capital minus the amount available, and you will find this after doing receipt minus payment, okay, at last, and then you will find out the total loss divided by the number of shares, the total number of equity shares, you will get the loss per share. Okay, और हमें दोनों को same loss कराना है, right? So deduct that loss from the paid up value of these two categories, you will get the the net figure. And if it comes in plus, you have to refund. If it comes in minus, you have to make the call, get the money from equity shareholders. Okay, this is the calculation. So now let's write that down in the liquidator's final statement account. What are we going to do? See here, it's very simple. As here 75 minus 59, it is 15.25. So from 2,000 shares, we are going to refund this much money. Okay, so this is what we have to write. See here, by equity shareholders on 2,000 shares, we are going to refund how much? 15.25. Yeah, 15.25. And on 6,000 shares, we are going to refund 0.25 rupees. Yeah, 25 paise. So that is equal to, see here, 2,000 into 15.25, that is equal to 30,500. So 30,500, and then here 6,000 into 0.25 into 0.25, that is equal to 1,500. So 1,500 will come over here. So in total, you are returning them 32,000 only. But here you have made now a fair distribution because of their paid up value. Their paid up values were different, so these were two different categories. So you have to make this calculation to make a fair pari passu or pro rata distribution, right? So this is how you have to do it. It's very simple, this calculation. It's just that सबको एक ही loss कराना है, okay? Everyone have to incur the same loss. The loss should be same. So that is why we have to find out the loss per each share and then deduct them with their paid up values, and then whatever you get, if it is plus, it is refund. If it is minus, then call. Like that you have to do it. So now let's tally this statement. See, it's very simple. So let's add up all this. See here, 60,000 plus 7,40,000 plus 1,40,000. Yeah, that is equal to 9,40,000. Yeah, 60, 7,40, 140, that is equal to 9,40,000. So let's write that down in the total column, 9,40,000. And then here in the payment side, as you can see here, liquidator remuneration 33,200 plus 21,800, the liquidation expense plus the debenture holder payment, that is 2,15,000, plus the creditor payment 1,90,000, plus then the preference shareholders payment 4,48,000, 4,48,000 plus 32,000, the payment to equity shareholders. That gives you the same figure. Oh, sorry, I made a mistake somewhere. Let's calculate that again. See here, 33,200 plus 21,800, yeah, plus 2,15,000 plus 1,90,000 plus 4,48,000 plus 32,000, that is equal to 9,40,000. Yes, yeah, 9,40,000 total. It is tallied now because the balancing figure has gone to equity shareholders. Yeah, so this is how you have to do it. It's very simple, it's not tough. Yeah, go on realizing the asset. If there is any secured creditor, deduct it from the asset, the security that has been realized, take the surplus out, do the liquidator remuneration. If there is any preferential or unsecured remuneration, then leave it empty, do it afterwards. Liquidation expense at debenture holders will get three things. Yeah, face value, interest outstanding, that is accrued interest, and the interest till the date of payment if the company is solvent, and mostly always the companies will be solvent. Then there is creditors, preferential unsecured, preference capital, dividends were in arrears of 2 years, so this is dividend of 2 years, right? Yeah, so that this is how you have to do it. And this calculation also is very important, and it's very simple, it's not tough. Yeah, this calculation also you have to pay proper attention. Okay, then see you in the next video.